Good morning, everyone, and welcome to Nadex Morning Analysis, where we look at hotspots in the markets for the day. Welcome back. Sorry we missed you yesterday. My name is Todd Rich. I'm with Nadex. With me, as always, from Keep Trading Simple, Brian Caprice. Before Brian and I jump into it, I am going to share this quick disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So today, the story is going to be Fibonacci Day. We're going to take a look at some interesting Fibonacci levels. Here's a preview of what we're seeing. Gold, obviously volatile in the markets. It was flirting around 1800, completely bottomed out. Yesterday, down below 1750, and now we're looking for retracement levels. We will get into gold Fibonacci, but where we're going to start is actually over in FX with the pound yen, and we do have some interest. I mean, you know what? Look at this, and I had it on there. Of course, that's how it's going to do it. I'm going to draw it again real quickly. Boom, and then Brian's going to do this as well. So I'm just giving you a quick little preview that there are some interesting Fibonacci levels in the markets. So, in fact, Brian, I'm going to turn it over to you because we did get, there was a little bit of news during the evening, and then we've got Michigan consumer sentiment coming up later this morning, and we will discuss that. Probably at the tail end of it, maybe looking at the equities. But let's start off with the first fib, and let's flip it over to the pound yen.
Yeah, so the reason I'm looking at the pound yen is because we knew we had retail sales month over month. It actually came in much worse than expected. It was supposed to be positive. There was a revision from last time as well. So it's it's an interesting story. We expected that one to be good. So it's a little bit of a surprise that the pound retail sales is negative. Question is, are they a month ahead of the U.S. or are they a month behind? The United States absolutely blew it out of the water. We'll see how it turns out. But for the fact that it is not only the revision of a greater than, a greater, I guess, decline, right, from last time as well as this time, the pound is actually doing okay. But whenever you see that, again, you always want to look at it. It's like this has been the story for the UK in the morning. There has been some interesting news, and they've talked about non-bank sectors posing risks. And again, there has actually been some negative language about it. So I'm surprised that we're not actually having a little bit more. But it may be because, again, we're going into the weekend, and it's not like anybody's necessarily in the best case scenario at this point. So, and even the current account for the EU was not great. So again, you're seeing the euro pound only move 17 pips. So not tons there. The reason why we're bringing it up, though, is let me go across. This is a level that I worked on with my students. Whenever we see any type of level of basing, we're always looking for kind of an area where there's potential reversals. So typically, again, supply and demand traders are typically more of kind of reversal. Not reversals. I would guess reversal specialists is a great way to say it because they're always looking for that kind of turning point. Most times we like to focus on the extreme ranges, but there is always that trade right in the middle. Now, fib people like dealing with pullbacks, where one of them, supply and demand is more of reversal. Fibs is more, I guess to some extent there is a reversal, but in the grand picture of things, it tends to be more of just the pullback entries is what you're trying to grab. As you guys know, we brought it up. Fibs is a strategy that when you look at the rules on it, you're not supposed to use it as the only strategy out there. You're supposed to use it to confirm another strategy. This is one of the ones that my students called the golden setup. It is what it is.
I like that name.
Yeah, they call it the golden setup. They like it because it combines two different strategies that they kind of confirm each other. So right now in the pound yen, you can see that we had a level of basing. We can see it because we had a nice push up and a very strong push out of it. Again, it was after a big push down, so there was something that stopped this from completely retracing, and it's typically going to be sellers because if there was no sellers, it would have gone all the way back up again to that 152.70. It is right around, again, you can see it's very, very clean, and then we know that the push all the way down. So when you take fibs, I know it because I have the little leaf there that's kind of like my new way to kind of mark these off. Yep. But when I pull it back in, it just happens to coincide with the very, very bottom of this pullback where kind of the explosion where the buyers originally stepped in. If you guys can see it here, just happens to be the 50%. So again, we know that the 50% is a very, very common area where it pulls back to. It actually already has hit that level once and kind of pushed back down again. Now, as we're rotating sessions, there's a couple things that go. I mean, again, is it fresh? No, it's been hit once, but again, it didn't go very far and had a very, very strong push out of it, even though the news was kind of, getting in there with it. It's a level where sellers have stepped in twice. It's a 50% retracement, and it's at a session open. So there's a lot of different things in there that are kind of stacking up to this one. It is a Friday, so the volume is going back down again. But again, it's one of those things you can't pick and choose and say, well, it's Friday, I shouldn't trade this. If you have a strategy and it is a rule-based strategy, you have to trade it every single time that it comes up. Statistics only works if you do it every single time. And again, you should know whether your strategies are working or not working for you. I mean, it has already worked out once, but we just like to talk about kind of what's hot. The pound did have bad data today. Eventually, everything that's kind of supported the pound thus far is going to disappear and be out of the market. And then it rolls over into more of a yen play. And again, the yen has been pretty, everything right now with the yen has been pretty weak, but the US market is not open where the yen gets all its strength from. So kind of one of those things. Is it there? Yeah, great. If you practice good, risk management in here and talk about, do I have enough room to run? A lot of it makes sense. Again, not a trade recommendation. Look at it. If you're not used to this, go to demo, draw some fibs, draw some supply and demand. It's just one of those things that we like to bring up because a couple different strategies are all overlapping at the same level, and we just want to kind of point it out. So.
Yep. All right. The next one, and I'm just going to bring it up for a moment, and I do want to talk about gold, and I want to talk about gold more than just the fibs today. As you can see on the fibs here, in fact, I'm going to try to make my chart a little bit larger so we can really see it. Okay. We knew gold was that 1800 level. We were stuck, and then yesterday the bottom absolutely fell out of gold. Touching down below 1750. If you did draw your fibs on there now, waiting for that retracement. People have been looking for an opportunity just to continue to sell this, and I think we want to talk about that. But it did come up to that 23.6 fib level. Sellers stepped in, and here we are. We're right off of it and heading back lower again. So the question is, what's going on with gold? Why are we seeing this weakness? It is kind of interesting because we are seeing inflation, just although the inflation numbers out of the Eurozone weren't that large, but gold isn't reacting the way that we would expect gold to react in an environment like this.
Yeah, I think there's a couple things. I have a sell level up at 1776, kind of the same thing we just talked about. It's a level where we had a great pullback and a decline, showing that there was some kind of indecisiveness as well as some fighting back and forth whether the price was going to continue to go lower or go higher at 1776. If you draw kind of the top to the bottom as well, it also happens to be a 50% fib level. So it's one that maybe it doesn't come into play today, but it's one that I think we need to take note of, that next time price rallies up to 1776, that again, this is a level that is not only an area where we've seen sellers in the past with a decent kind of pullback, a very clean candle, but it's also a 50% pullback. Now, some of this, again, you brought up a great point about inflation. I think some of the tweets today coming from Kazakhs talking about how ECB inflation outlook was likely to be revised higher, kind of shows, all right, great, they're probably not the best as far as accuracy goes. Assuming no additional shocks, inflation will most likely be greater than projected. All right, that should be good for gold, right? It's positive. There's no reason to predict perpetually high inflation. Basically saying that, again, let's not scare everybody talking about this extremely high inflation. He just made two comments saying, yeah, it's probably going to be higher than expected. We're preparing for that. But then he ends with, a 2% price target will not be met in the medium term.
They can't get it up there. Yeah.
Yeah. And again, we've seen the year over year for like the UK up at like 2.9 or, so there's everything is showing that it's higher, but again, their terms of when they're looking for, they're kind of looking for right now. It's statements like this. Like I said, everything up until that, you're like, yep, gold, all along. And then all of a sudden, but we're not going to hit the 2% target. Remember, the United States actually has a little bit different of a mandate than, say, the ECB or pretty much all the other central banks out there. Ours is kind of like a dual prong. There's a single. It's based off of inflation. So they're looking at some different kind of metrics than what we kind of focus on in the United States. One of the things, too, that makes the ECB difficult is, remember, they're not dealing with just one economy or one level of economic policy. remember the ECB kind of has is an overall policy, but then each nation has its own individual economic policy. Remember, when Italy, the start of COVID, Italy was basically locked down. You weren't allowed to leave your house for like a month, 2 months, right?
Right.
The rest of the European Union didn't have those problems. So there's different economies that they're juggling with. So it's interesting when he says something like this, because all of a sudden, if we find out that the inflation target, or not target, but the inflation in Germany is at 5%, it doesn't matter what the inflation rate is or what averages you take, they have to move before
Right.
they just completely destroy Germany. So it's a little bit more of a complicated kind of scenario. And then again, also with gold, seeing retail sales coming lower, that's not necessarily the most positive thing for gold either. So,
Correct.
we're seeing, European CPI, it's up 3%. Prices are 3% higher than they were, this time last year. So, GDP, consumer inflation expectations. The consumer expects a 2.7. That is higher than the 2.7 target. But when you're looking at, again, expectations and surveys and things like that, it's kind of hard to say, we're in the clear yet. And again, when retail sales are coming in, remember, retail sales is what drives things. But just remember, the retail sales for the United States, it was supposed to be negative as well. They blew it out of the water, and manufacturing is also picking up. So, this 1.8 versus the minus 0.1, that's actually big for core. So it just shows that recovery is not the same everywhere, but there's great opportunities. Remember, as soon as everybody says, every single country has been saying that the recovery is being led by the United States. That's kind of where I see it moving first. New Zealand, again, New Zealand's not a big enough country to be leading, but remember, New Zealand's numbers are just absolutely knocking out of the park as well. They're going to be the first one to raise interest rates, and everybody else is kind of just, we'll do it soon enough. So,
Yeah.
And then again, the Chinese data, the retail sales data for China was not good either. So everybody else is having problems. We're spending money left and right because that's what we like to do here. So, I would say, watch. There's plenty of opportunity, and like I said, I think gold probably still has a couple more hiccups, and I really think what we're going to see in the next month to 2 months is probably gold kind of push a little bit lower, but not for the reasons that most people would think. Not that gold's in a bad situation, not that gold's a bad buy or anything like that, but inflation is the number one thing that everybody's looking for, and how do we control it before it gets out of hand? Because everybody's in agreement. If we do nothing, inflation is going to get nuts. Everybody knows that. It's just, when do we start tapering? Remember, the EU target is 3 months, December. Our target for tapering, everybody said it's going to be this year, but maybe not now. Okay, well, we're in September. We have October, November, December. The next 3 months as well. We need to really kind of cut off inflation. So I feel like right now it's about more like positioning more than anything else.
Right.
And again, there's a lot behind the scenes to it, but there's definitely shorting opportunities. I think 1776 is one of those great ones, just similar to what the pound does. And there's a couple other currencies out there. And again, if this was purely a anti-institution, you wouldn't see the cryptocurrencies all red as well.
Also going in the red. So we talked a little bit about the pound yen. We talked about gold. The indices are all a bit range bound. I mean, they've just been chopping back and forth, but we have seen some volatility over in the energies, and we're running out of time. But I did want to kind of cover we've a little bit. Maybe we see oil. It's actually sort of consolidating a little bit, but backed off some of its highs.
Very small European movement today for oil.
Yeah, and then I thought if we could just quickly cover oil, and then hallelujah for you on your natural gas. I mean, nat gas, using it steps, finally seeing a little bit of relief here. I honestly thought when it turned south, it would go south. But
I'll take 2% drop every day. I'm good with that. If it wants to continue for the next month and a half at 2%, I could probably stretch the propane just that long.
So let's just take a quick peek at oil and nat gas, and then we'll call it a week.
Yeah, I mean, here's oil, guys. Oil is very, very small amount of movement within that time frame. You can see oil on most days moves a lot more in the European session. You can see the size of the rectangle. Very, very small. And again, none of the data today, the retail sales being down, nothing really today says that we have an explosion of growth. Again, the current account being down, not good for demand. Retail sales, not great for demand either. And because of it, oil had a very, very small, peak to trough here. We're talking about 40 cents total. Not a lot. It's opened up for the U.S. session. Remember, we had that area up top at 73. Again, 73 has bounced twice now, and both times turned it around. So if we're able to creep up, that could lead us down. I heard it this morning or yesterday. I don't know. They all kind of blend together. But talking about how Russia is upset with the Middle East, with Saudi Arabia, because
Right.
Saudi Arabia is starting to increase oil supply and it's cutting the prices of the oil they're selling it for. Again, this is where greed comes into it. When multiple nations, they can all agree on something, but at the end of the day, everybody wants money. And again, Middle East they're the ones that are pulling the chips first, and Putin is not happy
The
about it.
others
Like,
will
wait,
have to
you're making more money than us? You did it first? Yeah.
Yeah.
Yeah. So and again, he shouldn't be upset because Russia is the other nation with a lot of natural gas. So with natural gas this high, he should be saying, everybody, let's go climate change. Get rid of oil. Let's go to natural gas and then crush the Middle East. It's like crush whatever, whoever's the bad guy. And then again, yeah, you said natural gas. I mean, you guys are looking for volatility. It's down 2.25% today. I mean, during this charge up, it was up 3-4% every single day. Traders love volatility, so much volatility here. And again, if you're not familiar with this, it's one of those things that you can trade with Nadex and kind of cut your teeth on it before stepping in anything that's extremely dangerous. So, yeah, I
And
mean, like I said,
yeah,
a lot in there. So,
I just want. I mean, it has. I mean, just take a look at the binary options here. We've blown through all of the short duration binary options. I mean,
mm,
we're well below any of those. So you'll have to wait for more of them to print. But we do have the daily binaries up there, and you can see. I mean, it's kind of crazy.
they're at
It's
the bottom
going
of those
down
too.
towards. It's trying to blow through those as well. So it just kind
Yep.
of gives you an idea of how quickly that nat
Hmm.
gas price has been dropping and how people are sort of getting out of the way. Uh,
Yep.
but we're going right through all of those binary strikes.
Yep.
Hey Brian, as a parting shot, just the
Hmm.
last thing, because we do have the consumer Michigan consumer sentiment. We
Hmm.
do have Michigan consumer sentiment. Is there anything to be looking at potentially for the equities? I don't know if you want to take a quick peek over at the S&P or at the Nasdaq or at the Dow. Just I don't know, take a peek at one of them
Yeah, I mean,
because
there's
they're
a
all
level
sort of
sitting.
range bound.
Yeah, they've definitely kind of snuck back in a little bit of a range. There is a little level in the S&P 500 that's just above. I love these kind of step to the downside where you have the impulse correction, and then explosion off. That actually formed early this morning. Typically, again, on the indices, I like to look on the 15-minute. It's a decent level. The basing, we're about, I don't know, what, an hour from that news release. It's what, 10 o'clock? Yeah, it's 10 o'clock. So we have kind of the opening print. We'll see what it does. If we get enough of a push up, that could be a potential area to roll over, both for the open as well as for that news today. Um, Again, news wise, you got to drop to the 15. You got to be looking. The biggest thing is going to be what levels are formed at the open, and then what do we do with it at, again, that consumer sentiment number. And again, it's expected to be better than it was before. Everything has looked good after that retail sales, again, depending on when they took the survey. Like I said, it's a survey of 500 people. 500 people is not the entire economy, so just understand that it is one of those, it's the only news that we have today. The other thing about this is it's a 10 o'clock news release. Remember, the most common time for
10:30
reversals in the morning
reversals.
are at 10:30. So we have to stomach, we have to be able to make it through the open, see what happens. There's a small level here. I think NQ has one. Yeah, NQ you can see is at a larger time frame level. Got to pop just a little bit more. YM, same thing, just a little bit above. We got levels, and then even the Russell. I mean, the Russell and the YM chart, you couldn't really tell the difference besides this area up top. So they're all at a level where they're grinding higher into a level. I would say watch out if we just kind of grind through and we don't have a very productive open. That means people are really focused on the consumer sentiment number. If we drive high, I actually wouldn't be surprised, although it's forecast to be higher. I actually wouldn't be surprised if this comes in a little bit of a disappointment. The reason why is because you think about when they're polling, all we hear about in the news is Delta, kids, this,
Right.
that, breakthrough, and
You
yeah. So
like a fraternity
again,
house.
if it comes in a little bit negative, it doesn't mean that anything's changing in the economy, but that could literally lead us and determine whether we're going to have a green day or a red day on the indices. And right now, the market doesn't know. I mean, they're up 0.1%, or they're down 0.1%, down 0.06%.
Then
It's done
that's
absolutely nothing because they're waiting and seeing. So again,
yep.
I'd say they're more set up for a short at the open, but there could be something more there later.
Okay. All right. Well, with that, any questions for Nadex, please email us customerservice@nadex.com. Down at the bottom, any questions for Brian, you can email him at support@keeptradingsimple.com. Brian, I'll be back on Monday. So everyone, please enjoy your weekend and good luck in the markets. We will catch you on Monday. Thanks, everyone.